Let's now take a look at the very latest in the world of business as the JSE looks set to open to mixed global markets this morning, underscoring the turbulent nature of the week, which included the local bourse's worst day since March of 2020. The local bourse needs to gain about 1.8% to reach last week's close. Matete Thulare, head of foreign exchange execution at Rand Merchant Bank, joins us now to talk through the latest market developments. Matete, very good morning to you. Always a pleasure having you on the show. Give us an overview of how the markets opened this morning, especially considering how the local market and currency reacted to yesterday's rate decision and growth outlook.
Good morning, Mpho. I suppose already we've ticked off 1 month of the year already, so another 11 more months to go into the year. And as you say, it's been a really mixed overnight. Obviously with Asian stocks mostly higher this morning, with just Hong Kong lagging. The S&P futures is trading 70 points lower from our close, despite a brief rally after the close last night, following better than expected earnings from Apple. Now, we've even seen the likes of Naspers, that's had a really tough week, falling about close to 9% over the past 4 sessions. And I suppose we're really unlikely to see much cheer this morning with 10%, with Tencent trading 70 pips lower. Now, also, you know, when you take into account all of these moves in the equity market, the rand has also weakened overnight against the strengthening dollar, and also commodity prices are once again lower. Now, the dollar strength is the latest pressure to absorb, but also, you know, when you think about the rand, it's came through a period of huge stress this week, especially in the light of the Federal Reserve, the MPC meeting, and also U.S. growth numbers. But it's, you know, it's been really resilient. We start off this morning around the 1544 level with a bit of a mild downside bias, but also, you know, there has been huge pressure on the rand that has been absorbed well. The SARB yesterday hiking by 25 basis points as expected, but the rate markets are finding some sort of relief. I mean, there is no talk about a 50 basis point hike as yet, and already we saw one member from the MPC team voting against the hike, and also the quarterly projection models from the Reserve Bank also showing that we might have a fewer interest rate hikes as anticipated. But also, you know, it just shows you that the rand and the JSE market over this past couple of days has obviously been quite turbulent, and I expect with the amount of key event risk that is coming through into the next 11 months of the year, we're also going to see quite a lot of volatility.
Absolutely, Matete. The oil also pushed above $90 a barrel for the first time since 2014. What's driving that rally?
So look, oil has headed for its 6th straight weekly gain. I mean, now we're seeing ourselves, you know, trading at prices close to highest levels in 7 years. And it's mainly on the back of, you know, robust global demand. Now, also what's also driving this is also the heightened geopolitical tensions that we are seeing between the Russia and the Ukraine. And then obviously we are seeing warnings that Russia may invade Ukraine. That's also contributed to the climb in the oil price. Now, what's also another driving factor is the worldwide consumption is obviously continuing to recover. I mean, it has been hit by the coronavirus pandemic, and obviously what we have seen is the key stockpiles are also drawing lower, and also physical markets are getting stronger. So the surge in prices has come despite the jump in the dollar after the Federal Reserve obviously signaling that they are ready to tackle inflation and also increase interest rates in March. But I suppose all the attention now in the oil market will shift to next week, where we do have an OPEC meeting on the 2nd of February, where they will assess the market and decide whether what they do with regards to supply, whether they limit or increase supply. And that will be the next point of attention come next week on February the 2nd.
And looking at company news, Massmart Holdings has posted a sales update for the 52 weeks ending the 26th of December of 2021. How have they fared?
So if you remember, Massmart is the owner of Macro Game and Builders Warehouse. Now that whole as a group, they said their sales have fell close to 2% to about 84.5 billion rand, with the civil unrest, the COVID-19 restrictions on trade, and also global supply shortages all weighing on the group. Now, they've actually come out and said they had a really bad fourth quarter of 2021, obviously as it battled with the effect of the July civil unrest that we saw in Gauteng and KZN. Now, on the back of that, they've also said fourth quarter sales fell close to 8%, and that's also wiping out the marginal gain registered in the first 9 months of the year. Now, remember that they're really headquartered in KwaZulu-Natal, and they're actually controlled by the U.S. offshore company Walmart. Now, they've said that, the civil unrest that we did see in July, that caused about 2.5 billion rands worth of damage. Now, that's an estimating in a net loss of around 650 million rand as a result of the insurance shortfall. Now, the group has been making losses since 2019 and has brought in 3 top Walmart executives from the U.S. to reshape the company with a turnaround strategy. And obviously, I think, if you just look at some of the corporate activity that has taken place over the past couple of years, this includes them selling the loss-making Cambridge grocery stores and also closing down Dion Wyatt as one of the entities. So it just shows you that there is still quite a lot to do in terms of that turnaround strategy, and we could see things unfolding in the near future with regards to Walmart.
Apple, on the other end, also posted its financial results for its fiscal 2022 first quarter, with the company posting an all-time revenue record. What are those numbers looking like?
So Apple reported a record $124 billion quarterly revenue last night. I mean, this is despite the global chip shortage and obviously the shifting impacts of the pandemic that we have seen that has weighed down on other big technology players. Now, the expectations did really beat what the market was expecting, and this has offered signals that the coronavirus era tech boom might not be over as yet, despite diminishing growth with firms like Netflix, where we did see the numbers. Obviously, they're down. But, I mean, Apple came out last night and said smartphone sales, that topped about $71 billion. That's been, helped by strong demand for the iPhone 13, especially in China. So overall, the tech giant that posted a net profit of around $35 billion in the first quarter compared to the $28 billion that we saw in the same quarter of the previous year. Now, the semiconductor shortage, which has been caused by a mixed number of factors, including a surge in demand after the COVID-19 pandemic and obviously virus-linked disruptions in chip-making nations, has affected industries across the globe, from tech giants to even car makers. Now, despite this volatility, I mean, Apple has become the first U.S. company to hit a $3 trillion in market value. That briefly reached that landmark in early January this year. So it's a demonstration of the tech industry's pandemic power, and obviously the numbers that came out from Apple last night, quite interesting. And I suppose it's also going to be an interesting year for them, especially given how everything is going to play out, especially with the chip shortage that we are seeing, and obviously how they want to take their business going forward.
Interesting indeed. Thank you so much for your time. We're going to have to leave it there. Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank, giving us a sense of the very latest in the world of business and how the markets are faring.